Bloomberg Audio Studios. Podcasts, radio, news.
This is the Bloomberg Daybreak Europe podcast, available every morning on Apple, Spotify or wherever you listen. It's Monday the 10th of February in London. I'm Stephen Carroll. Coming up today, Donald Trump unveils plans for punitive tariffs on steel and aluminium imports. Activist investor Elliott builds a significant stake in the struggling British oil giant BP. Plus, after years of decline, currency trading is cool again. We'll have a special report on why. Let's start with a roundup of our top stories. Donald Trump says he will impose 25% tariffs on all imports of steel and aluminium into the United States. The US president says the tariffs will apply to imports of the metals from all countries. Here is his exchange with reporters on Air Force One yesterday.
We'll also be announcing steel tariffs on Monday.
On this, tomorrow?
Monday, yeah, tomorrow.
What countries will those go on?
Everybody. Steel.
Including Canada, Mexico,
Yeah.
United States?
Any steel coming into the United States is going to have a 25% tariff.
What about aluminum, sir?
Aluminum, too.
10%?
25%.
25 for aluminum as well?
25 for both.
Trump didn't clarify if imports of metal from China would face double tariffs after he imposed a blanket 10% charge on products from the country last week. According to a report from Morgan Stanley, US industry is heavily reliant on imported aluminium, while the aerospace and auto sectors also use high-grade steel from overseas. Joe Doe covers metals and mining for Bloomberg News.
A lot of difficulty for traders, for buyers in the U.S., and more broadly across the markets across the globe, right? Because the U.S. market kind of sets the tone. And I think there's a concern, right? We had Trump say he was going to put tariffs on, imports from Canada and Mexico last week, and then he pulled back from that. Now he's coming out and saying aluminum and steel tariffs on all incoming imports across the globe.
Analysis there from Bloomberg's Joe Doe, as Donald Trump says he'll also announce reciprocal tariffs this week on countries that tax US imports. Away from tariffs, the US president also told reporters he believes Elon Musk's government efficiency team had found irregularities in US Treasury Department data.
There could be a problem. You've been reading about that with treasuries. And that could be an interesting problem because it could be that a lot of those things don't count. In other words, that some of that stuff that we're finding is very fraudulent. Therefore, maybe we have less debt than we thought of. Think of that.
It's not clear whether Trump was talking about US government debt or payments processed through the Treasury Department. When asked about the president's remarks, an official told Bloomberg that Musk's so-called Department of Government Efficiency and improvements to the Treasury payment system would reduce future deficits and debt. The White House has yet to respond to a request to elaborate. BP is facing a showdown with one of the world's most aggressive activist investors. Elliott Investment Management has built a significant stake in the British energy giant, which has seen dramatically worse returns than other oil majors for years. In other companies, Elliott has successfully campaigned for breakups, ousted board members and changed corporate policy. BP reports fourth quarter financial results tomorrow and a new strategy in 2 weeks' time. British workers think job cuts are coming and they're holding back on spending. Unemployment expectations hit a 2-year high last month as companies and employees grow miserable about the economy. Bloomberg's James Woolcock has the story.
Did you check to see if your CV was up to date this new year? Well, a report from the Bank of America says nearly half the people they surveyed are worried about their job. That's a sudden jump of 10 percentage points in 1 month. Despite 2024 being one of the best years on record for real terms pay increases, it seems reports of job cuts from retailers and rising taxes are making people plan for the worst. Many had looked to the UK consumer to boost growth and spend more, but instead they seem to be bracing for a rainy day. In London, James Woolcock, Bloomberg Radio.
France's president says companies and funds will invest over €100 billion in artificial intelligence projects in his country over the coming years. Speaking in a television interview last night, President Macron referred to a previously announced project of up to €50 billion from an Emirati fund, but also fresh money from US and Canadian sources. Brookfield Asset Management says it plans to invest $20 billion to develop AI infrastructure in France over the next 5 years. Macron was speaking ahead of today's AI Action Summit in Paris, which is being attended by political and business leaders, including India's Prime Minister. And the Philadelphia Eagles are Super Bowl champions. They defeated the Kansas City Chiefs 40-22 in New Orleans. The win denies the Chiefs a third consecutive victory in American football's showpiece event. Here's Super Bowl MVP and Eagles quarterback Jalen Hurts on what it took to beat the two-time defending champions.
You don't do great things without the guys around you. So the effort, the work, always leaning on that, trusting in that, and trusting the process and staying the course and sticking to the script.
Eagles quarterback Jalen Hurts speaking there after his opposite number, Patrick Mahomes, was sacked 6 times and threw 2 interceptions during the one-sided game. It is the Eagles' second Super Bowl win, having claimed their first in 2018. Those are our top stories. On the markets, we're looking at the MSCI Asia Pacific Index, 0.25% weaker this morning. The Bloomberg Dollar Spot Index 0.2 stronger on the back of those latest tariff announcements. The 10-year Treasury yield is down a basis point at 4.49%. European stock futures are positive for now, up 0.3%. And on Wall Street, stock futures are looking positive as well. S&P E-minis are 0.3% higher. Well, in a moment, we'll bring you more on the steel and aluminium tariffs that Donald Trump is planning, plus why the new president's policies are making currency trading cool again. But first, another story that caught my eye this morning to do with much smaller amounts of currencies that perhaps we're used to talking about. Pennies. Donald Trump says he's ordered a stop to minting new pennies because they cost more to make than they're worth. Now, there have been attempts to eliminate the coin for decades. The US Mint said in its 2024 annual report that it costs about 3.7 cents to produce and distribute a penny, up more than 20% from the previous year. These higher costs are partly due to the rising price of metals like zinc and copper. But on Truth Social, Trump announced that he directed the Treasury Secretary to halt production of the 1 cent coin featuring Abraham Lincoln as part of a broader effort to cut waste in the national budget. Now, this is reigniting an old debate over the penny. It's not just one being had in the US as well. It's worth noting Finland, Belgium and the Netherlands have stopped minting 1 and 2 cent coins. And last year, the British government didn't place an order with the Royal Mint for new 1 and 2p coins as well. So something being thought about in many parts of the world. But that's what Donald Trump is planning to do with the penny anyway. Let's bring you more now on those Trump tariff plans. The US president announcing a 25% levy on all imports of steel and aluminium. REMEA News Director Rosalind Matson is with me now for more. Ros, good morning. Steel and aluminium tariffs were among the first ones that Donald Trump imposed during his last presidency. So how significant is this latest move?
Well, it does fit in with the pattern that we've seen of quite a blizzard of actions in the early stage of the Trump presidency, an idea that pretty much Donald Trump wants to put tariffs on everything. He's talking about reciprocal tariffs this week, blanket tariffs, and that this is the more targeted announcement, really, of any that we've seen so far. Mostly he's just announced that he's putting a flat tariff on imports from a particular country. But, of course, we also can see from the market reaction. The dollar obviously has moved a bit on this, but stock markets don't seem to be crumbling on it. And the sense that maybe is this again an opening salvo of something that would become refined or even deferred as time goes on, because that's what we've seen so far from his announcements, be it about blanket tariffs on Canada and Mexico. Obviously tariffs did come into force on China, and that's one particular exemption. But the interesting thing will be in this region to see whether the EU now feels it has to get into the fray. Europe's been watching all of this, no doubt, in quite a nervous fashion. And now do we see Europe say, well, we're going to have to preempt something here, so we are going to have to announce something ourselves against the US? Or do they wait to see when or how these tariffs might be enacted? Because that's also not clear at the moment. And then do you see some kind of European response come at that point? But certainly just another element in the complex soup, should we say, of tariff announcements so far.
Yeah, indeed. Who does stand to actually be hurt most by these tariffs?
Well, the big one for both steel and aluminium is Canada, as well as Mexico. China, for both, although China didn't export a ton of aluminium to the US last year. It really drops off after Canada as by far the biggest exporter for both. But you do see names on that list that are countries you would consider to be US allies. I mean, Germany, for one. You also see countries like Vietnam, Korea, Japan, the UAE, Bahrain. So it's a really broad church of countries that could be impacted by, but far and away the very biggest one of all of those is Canada.
Okay, so that's the key to watch in terms of response. This is all happening as China's retaliatory tariffs announced last week come into force today. Does this open the door potentially for further escalation on that front?
Well, it's a bit hard to know whether this 25% tariff would be on top of the blanket 10% tariff that Trump has announced on China or in lieu of, because, again, we don't know when some of these actions might be taking effect. So that's one aspect of it, because if it's then seen as an add-on already for China, then you will need to see some kind of response from China to it. What we have seen so far, though, is even though China has taken action against the US, they both seem to be looking for something that's quite calibrated, to not be seen as to be taking the next step of escalation. And certainly you can see a desire from the part of China at some point for Xi Jinping, the Chinese president, to talk to Donald Trump about this. And that call has not happened yet. Maybe it'll happen at some point this week, because when they get in a room together, they tend to be able to sort stuff out. We've seen that previously, and perhaps that's the next card that China's going to play.
And just a word too, Rosalind, another story that we heard from Donald Trump about Elon Musk finding irregularities, or rather his government efficiency team finding irregularities at the US Treasury. Not exactly clear what they were.
Well, that's right. It's unclear from Donald Trump's comments whether he was talking about treasuries per se, or whether he's talking about the payment system that operates through the US Treasury, because that's where Elon Musk and his Doge group have been focusing their attention really so far, is on payments to contractors and for grants. But Donald Trump referred specifically to treasuries, so it's a little bit unclear what he meant by that, and whether he was also referring to the payment system. And that's where we are potentially expecting announcements, a bit like the way that Elon Musk is looking at every government department and the payments that are occurring. But that certainly does raise a question about what did he mean by that, because no one's really talked about bonds so far. And that would be quite a big development if indeed that's what he meant. But it does again raise concerns about how much people are poking around in the cupboard at Treasury, and what does this mean? You know, you can see that the incoming US Treasury Secretary, Scott Bessent, says, don't worry, it's all encrypted, it's read-only, they're not able to see a lot or do a lot. But there are those elements of concern about if you start examining what's going on at US Treasury, where does that start and where does that finish?
OK, plenty to watch there as well. Rosalind Matson, our EMEA News Director, thank you. Let's turn now to another aspect of the tariff story. Trump's moves have fired up volatility in the $7.5 trillion a day currency trading market. That's left banks and hedge funds scrambling to rebuild long neglected FX teams. Our FX and rates reporter Alice Atkins has been writing about this, and she joins us now for more. Alice, good morning. How are, first of all, Trump's tariff announcements affecting currency markets?
Well, Stephen, it's a good time to be an FX trader. There's a lot of focus on FX markets, given they tend to be the first to react to this sort of geopolitical news. We're seeing the dollar stronger this morning, and we've seen some big intraday moves between the Canadian dollar and the Mexican peso, as Trump announced and then sort of dialed back on his tariff measures. And there's still lots of uncertainty. We don't really know what's coming ahead. Trump's indicated that other regions are next in the firing line, like the EU. So many see these sort of big moves continuing, and it's stacking up to be a very busy time in terms of FX volumes. Hedge funds have been boosting their exposure, and banks have been adding to staffing as a result.
So clearly a lot of interest in FX. How does this compare to the return of the carry trades in recent years and the blow up in the yen?
It's right. Interest in FX did come back in recent years as central banks aggressively hiked rates. You really need those interest rate differences in order to make money in FX, and the industry suffered during that period of ultra low and zero rates, and lots of specialist FX funds shut down. But because the central bank action was very synchronized, volatility stayed fairly low. And for bank trading desks, it's volatility which really makes them money. Margins are higher. People need to switch up their positions a little bit more in response. And we're already seeing them starting to benefit from higher volatility since the US election when looking at fourth quarter earnings results.
So what has this actually meant for people who work in this area on those trading desks? They had shrunk and now all of a sudden it's the top job.
Yeah, exactly. I think for many banks and market makers, often the FX desk was a little bit smaller than rates and equities, and maybe they felt a bit overshadowed by their peers in other asset classes. But now they're very much in the spotlight, and it's particularly been the options desks which have been expanding, because with spot FX, it's become very automated and it's all sort of overtaken by trading algorithms. But options, a little bit more complicated. So that's where most of the hiring's taken place. And we've seen that across banks and market makers. Hedge funds like options, it's really the centre of bets for volatility. And you've also got a lot of corporate demand for hedging. They tend to use options for their FX hedging.
This is Bloomberg Daybreak Europe, your morning brief on the stories making news from London to Wall Street and beyond.
Look for us on your podcast feed every morning on Apple, Spotify and anywhere else you get your podcasts.
You can also listen live each morning on London DAB Radio, the Bloomberg Business app and Bloomberg.com.
Our flagship New York station is also available on your Amazon Alexa devices. Just say, Alexa, play Bloomberg 1130. I'm Caroline Hepker.
And I'm Stephen Carroll. Join us again tomorrow morning for all the news you need to start your day, right here on Bloomberg Daybreak Europe.